Bank of Industry gets Central Bank of Nigeria's nod to launch no-interest banking window. World Bank cuts Central Bank of Nigeria grant to $6.8 million. Oil drops as US-Iran pledge to continue talks. Japan's Nikkei crosses 57,000 for the first time as Takaichi secures historic mandate. Welcome to Business Express, reaching you from Abuja, Nigeria's capital. I am Musa Abubakar, your guide. Now let's begin by telling you that the Bank of Industry (BOI) has received approval from the Central Bank of Nigeria (CBN) to operate a known-interest banking window, a move that broadens the development lenders funding toolkit and opens a new channel of credit to businesses that avoid conventional interest-based financing. The approval allows BOI to commence non-interest banking operations, positioning the state-owned lender to mobilize ethical funding and extend asset-backed financing to underserved parts of the economy, including micro, small and medium-sized enterprises. The move aligns with Nigeria's wider push to deepen financial inclusion and diversify funding sources for the real sector amid tight credit conditions. Non-interest banking, which complies with Islamic finance principles and other ethical frameworks, prohibits interest payments and instead relies on structures tied to tangible assets and shared risk. Now, the World Bank has reduced the size of a planned grant to the Central Bank of Nigeria from $10.50 million to $6.8 million, with board consideration for the project now scheduled for March 27th. The funding, which remains a grant and not a loan, is for the CBN Technical Assistance Facilities, a project designed to strengthen the Apex Bank's technology-enabled, data-driven supervision of the banking sector and to improve oversight of domestic payment and remittance systems. Updated information from the World Bank website indicates that the project has reached the decision-making stage, the final internal stage before approval by the World Bank Group's board. And now to currency. How much is the Naira's exchanging for the currencies? Let's take a look. The Nigerian Electricity Regulatory Commission has clarified that not all electricity meters currently being installed across the country are free, as it sought to address growing confusion over the federal government's metering programs and recent warnings against illegal charges by electricity distribution companies. The chairman of the NARC, Musliu Oseni, who made the clarification, explained that meters provided on the government-funded initiatives are free at the point of installation, while other options still exist for customers who are unable or unwilling to wait. Oseni said meters supply under the Distribution Sector Recovery Program, known as DISREP, are fully funded by the federal government and must be provided to customers at no cost. But those who feel the deployment is taking too long can pay for the product under the MAP scheme. And now this government has proposed a 3.6 trillion naira deduction from the Federation account to fund electricity subsidies between 2026 and 2028, with the cost shared among federal, state and local governments. The plan appears in the medium-term expenditure framework and fiscal strategy paper, which estimates 1.2 trillion naira for 2026 alone under other FAC deductions, reflecting concern over persistent liabilities and inefficiencies in the power sector. Now, joining us virtually to examine the physical and structural implication is a policy strategist and law and governance expert, the director of Abuja School of Social and Political Thoughts, and a visiting professor at the Emerald Energy Institute at the University of Port Harcourt, Dr. Sam Amadi. Welcome to Business Express.
Thank you for having me. Good afternoon.
Okay. Well, to begin with, from a sector reform perspective, does funding electricity subsidies through FAC deductions make economic sense?
Sorry. I'm saying the normal economics that the assets to be used are part of the revenue requirements, which are recovered through tariffs. So the tariffs themselves have priced each of those assets and plan for recovery. So you don't need to use public finance apart from tariff to recover those costs. But because of the failure of the financial sector, the financial failure, oftentimes government now have to step in to provide financial subsidy, whether in terms of debts that they pay off, or whether in terms of grants they give to the sector, or whether in terms of subsidies that they help us to pay. So this is one sign that the financial state of the market is very bad.
Okay. Now, what risk does a 3.6 trillion naira multi-year subsidy pose to fiscal federalism and subnational finances?
First, the assumption here is government is grandfathering. Government is, taking funds that ideally belongs to the state and local government and hijacking them, even though for public good. So, in terms of fiscal federalism, it violates the idea that federal government is federalizing revenue in order to pay for services, which the degree of benefit that federal state has is not very clear. Now, I would suppose that the starting point will be the governors themselves sitting in the Economic Council, maybe seeing those debts and what part of it is payable by state. Again, don't forget that many of the state electricity markets are becoming independent. So, as at the last count, over 10 or so states have initiated their own electricity sector and taken their market from the national grid. So the question then is, how is this debt to be incurred? And what portion of this debt derive from state operations, state consumers, and state market? And if we have prepared to pay. So it might be that some states are subsidizing other states disproportionate to what they contribute to the debts in the market. That's where the problem is.
Okay, you said yourself some states have gone independent, but could this funding model distort incentives for states to somehow invest in their own power solutions under the Electricity Act?
Absolutely. So what the if a state knows that you're going to pay, it means that the state should be in their more efficient. So yes, it's the same for efficiency at the level of states, and that would betray the idea of a company.
Okay. I'm afraid we have to leave it there, Dr. Ahmadi. In fact, it's been your pleasure sharing your thought with us. Now, the Presidential Enabling Business Environment Council, PEBEC, in collaboration with the Nigerian Ports Authority, has concluded a 3-day stakeholder engagement in Lagos aimed at reducing cargo dwell time to the nation's ports. The engagement, titled Achieving a 7-Day Cargo Dwell Time, brought together the Ports and Customs Efficiency Committee under the Business Environment Enhancement Program Accelerator Framework. Hosted by the NPA, the session focused on streamlining port processes to improve the ease of doing business. The engagement followed a shadowing exercise in which officials observed real-time vessel berthing and cargo clearance operations at the Tinkan Island and Lagos port complexes. Speaking at the event, PEBEC Director General Zara Mustafa said the initiative was designed to move beyond identifying challenges to implementing practical solutions that have been delayed for years. Mustafa said the initiative integrates government regulators and private sector stakeholders to promote transparency and accountability, as well as the goal of reducing cargo dwell time and improving vessel turnaround time. Earlier, the managing director of the NPA, Abubakar Dantsoho, reaffirmed the authority's commitment to supporting PEBEC's mandates. Now, Nigeria has reopened the Zambia border corridor in Kebbi State, reviving a key route for agricultural trade with Benin Republic. The reopening was approved by the federal government under Bola Tinubu after a closure in 2019 by late former President Muhammadu Buhari to tackle excessive smuggling and spur the domestic agricultural industry. It is expected to restore cross-border movement of farm produce, including onions, garlic, white beans, dry pepper, and grains, both maize and sorghum, from Nigeria's northern food basket to Benin. Zambia, located in Bagudu local government area and linked to Segbana in Benin, has traditionally served as an outlet for agricultural commodities moving into neighboring West African markets. And to commodities, let's now take a trip and look at how price of commodities are fair. Now to energy market, oil prices fell on Monday after the U.S. and Iran pledged to continue talks over the Middle Eastern producers' nuclear program, easing concerns about a possible conflict that could disrupt supply from the region. Brent crude futures fell 49 cents to $67.56 a barrel after settling up 50 cents on Friday, while U.S. West Texas Intermediate crude was at $63.13 a barrel, down 42 cents following a 26-cent gain at Friday's settlement. Ghana Securities and Exchange Commission has directed local fund managers to cut back on offshore investments as it seeks to protect the cedi currency and strengthen macroeconomic stability. Ghana, a major gold and cocoa producer, is emerging from its most severe economic crisis in decades, and it is expected to complete a 3-year IMF support program in August. The SEC said in a circular that with immediate effect, local fund managers will not be allowed to invest more than 20% of their funds under management in foreign securities. Funds that were previously allowed to invest all their money offshore will now be limited to 70%. The Center for the Promotion of Private Enterprise has warned against the use of legislative trade restrictions to compel domestic value addition in Nigeria. It cautions that such measures could be counterproductive without sufficient processing capacity and supportive economic fundamentals. The warning was contained in a statement by the Chief Executive Officer of CPPE, Dr. Muda Yusuf, where the policy think tank argued that sustainable industrialization cannot be achieved through compulsion alone. He added that Nigeria's value addition drive must be anchored on competitiveness, sequencing, and market realities rather than rigid controls that could distort prices and weaken both producers and processors across the value chain. Now, investors gained 4.08 trillion naira as the equity market enjoy a bountiful week. Olayinka Ojo has details.
The market enjoyed a bullish trading week, gaining in all 5 of the 5 trading sessions, as the all-share index and market capitalization appreciated by 3.84% to close the week at 171,727.40 basis points and 110.235 trillion naira. A total turnover of 3.860 billion shares worth 128.581 billion naira in 240,463 deals were traded by investors on the floor of the exchange. The financial services industry led the activity chart with 2.188 billion shares valued at 50.459 billion naira in 94,005 deals, contributing 56.68% and 39.24% to the total equity turnover in volume and value. The services industry followed with 466.771 million shares worth 4.495 billion naira in 18,526 deals, while the third place, the ICT industry, had a turnover of 377.800 million shares worth 9.049 billion naira in 25,653 deals. Trading in the top 3 equities, Champs Holding Company, Access Holdings and Universal Insurance PLC accounted for 664.942 million shares worth 6.801 billion naira in 15,161 deals. A total of 2.421 million units of exchange-traded products valued at 438.466 million naira were traded in 3,084 deals. For bonds, a total of 449,548 units valued at 476.435 million naira were traded in 58 deals. On summary of price changes, 71 equities appreciated in price during the week, 35 equities depreciated, while 42 equities remained unchanged. Olayinka Ojo for Business Extra.
And now to global market, where Japanese stocks jumped to a record high Monday, leading gains in the region after Prime Minister Sanae Takaichi won a landmark election victory. Maria Dozakari is standing by. Well, Maria, it seems like Japanese stocks is actually the right place to take one's investment. What do you make of, what do you think?
Very impressive numbers this afternoon, but we're starting from Europe, where Stoxx 600 is adding 0.5%, joining the positive momentum in markets spurred by the weekend election in Japan. The figures show that DAX of Germany is higher at 0.43%. Following this, we have CAC of France at 0.01%. And on the other side, we have FTSE, which was down 0.22%. Now to Asia, Japanese stocks jumped to a record high on Monday, leading gains in the region after the election of Sanae Takaichi. Nikkei 225 appreciates an impressive 3.89% at 56,363. We have Shanghai Composite of mainland China up 1.41% at 4,123. And in Hong Kong, we have the Hang Seng Index higher at 1.76% at 27,027. U.S. stock futures nudged lower as investors awaited critical economic data and another batch of earnings reports following a volatile week that ended with the Dow average reaching a key milestone. The Dow is down at 0.05%. S&P 500 follows at 0.07%. We have mirroring these numbers, Nasdaq Composite at 0.16%. Now we move to Asia, where markets are mostly in upward trends to begin the week. South Africa JSE Top 40 started red at 0.51%. We have on the other side Kenya up 0.60%. Chinese Shitton Index higher by 0.30%. Namibia up 0.02%. And we have Ghana, which was higher at 0.52%. That's an outlook of global market for Monday. I am Maria Dozakari. It's back to Musa.
Well, thank you, Maria, for that update. Well, that's Business Express. Business Express returns tomorrow at 9:30 a.m. Thanks for watching. Enjoy the rest of your day.